Brokers have read it. How crazy is it on the trade floor right now? Every risk management employee at every money manager was busy checking short positions to see how vulnerable those positions are. I don't work on the trading floor, but I'm an attorney who services a variety of financial institutions, including broker-dealers. This isn't the exciting, hilarious answer you want, but a lot of people had no idea it was even happening until the past 48 hours, and even now, it's mostly just a funny news article about some internet trolls making a bubble. This is a big deal to the shorting community, but to the other 99% of the financial world, nobody gives a as much as young people on the internet like to imagine this as an epic David vs Goliath, Wall Street vs Main Street showdown for the history books. From a bird's eye view, it's actually just a brief dumpster fire where a couple hedge funds lost their shirts betting on one little small cap stock. It has happened before, and it will happen again. In 6 months, nobody will remember or care, except that, maybe, it will become more difficult for retail investors to trade options, and not because the greedy hedge fund oligarchs forced the SEC to crack down on retail investors, but rather because, when this is all said and done, there is going to be a black hole where most of these retail investors' brokerage accounts used to be, and the second brokerage community will be lambasted for failing to protect unsophisticated investors from a bubble. I have been monitoring the WSB threads, and while the WSB veterans know that they're making a suicide charge for the memes, they have brought thousands of naive, new investors with them who predominantly think that they're going to somehow come out on top, not realizing that they are cannon fodder for the more savvy WSB users to exit with gains. Redditors never seem to stop and think about why the WSB guys know so much about derivatives trading, or how they seem to know how to access and read from a Bloomberg terminal, or why there are so many users there that can seemingly drop tens or hundreds of thousands of dollars on complicated meme plays. How do you think that WSB knew that GME was open to a short squeeze and a gamma squeeze play? WSB's power users are younger finance brothers. It's 30-something investment bankers and portfolio managers memeing with each other and cosplaying as autists. If you didn't know what a gamma squeeze was 48 hours ago, you are their exit strategy and the down payment on their next Porsche. My wife works for TDA and she says the phone calls are 700 deep with hours-long wait times. Trading floors don't exist anymore, at least not like you've seen them in movies. Those scenes of guys answering phones were people answering client calls to buy sell stock. That is all but extinct. Any institutional investors with proprietary trading do so almost exclusively with models. If anyone left in finance is moving large amounts of stocks by their gut, it's because the power is so consolidated in one individual that there's no hectic scenes of papers flying and guys screaming around them. And they are most likely doing it on a computer screen. Trading floors nowadays look like cubicles sectioned into teams that contribute specific things. Most communication is done via Slack, and it's actually a pretty somber scene in times like these. It's just a bunch of stressed out people looking at screens. But again, even that hardly exists anymore. The scene of the most erratic hedge fund intimately trading in Gamestop right now is probably 3 dudes crouched around a screen stewing and staring at a model. I've been hearing lots of comments like how they've never seen this much attention on a single stock in decades, and that includes the dot-com bubble. Retail trade volume has dramatically increased this year with no-fee trades along with many retail investors stuck at home, but this is beyond insanity. Retail sales at a broker-dealer. It's been busier these last few days, with RH suspending GME and various other datakers. My inbox and voicemail has been a flood of "do you guys offer GME?" Worked from 7 AM to 10 today yesterday to try and keep up with it. What's more interesting is how this is making its way outside of the retail trader circle. My mother asked me to explain how a short position works yesterday. My phone has been blowing up with friends and family asking for my take on what's going on. A lot of people learning the basics of trading overnight, which is a good and bad thing. I'll leave the comment here because I'm a bit mentally taxed, but I feel like I have front row seats to a historic market event. Phone rep here: absolutely crazy times, hold times are through roof, we can't keep up with this pace. Risk manager at a major firm here: this kind of action is actually not so unusual. Things were a lot busier last March and the losses arising from customers blowing through their capital and leaving us to cover the rest are much lower. I think what's most noticeable this time is the feeling that no matter how correct the decision you make is, it's going to be seen by a certain segment of the public as motivated by corruption or greed. I can't speak for what's going on at any firm in particular, but I can tell you I couldn't care less about the financial health of the hedge funds who were responsible for this mess. If my firm takes an action to restrict certain types of trading, it's because we have an obligation to reduce exposure to highly volatile securities, not because we are taking orders from someone with skin in the game. This is what we're trained to do, and we are liable to the agencies that regulate us if we fail to properly risk manage the situation. I was a trader, though in credit not equities, stocks. I do quant stuff now, but I have been chatting with a friend of mine who's a cash shares trader, so probably the closest thing to what you imagine when you say a broker. Apparently it's relatively chill. There's not much liquidity in these stocks, GME et al, and so the consumer retail trader, there's only one nowadays, is pretty stressed about it, but nothing absurd. The rest of the guys don't trade these names, so nothing really out of the norm for them. March 2020, i.e. when COVID blew us up, was much crazier in my memory, though I am on a different floor than equities where that stuff matters more. As others have pointed out, brokers don't really exist anymore. Trade floors do exist, but exchange floors, i.e. the floor of New York Stock Exchange, are mostly a TV studio. Happy to answer questions if people have them. I work for one of the largest firms as a broker. Our hold times are longer than normal, back to 2 hours at most. Similar to April-May of 2020, around half the portfolios I saw today had some meme stock in them. I've also received way more calls from people in their late 20s than usual. They usually need less tech support, etc. Our company has restricted many stocks from being bought on margin, writing covered calls new shares purchased, tons of new accounts, and there's a feeling of sticking it to the man, and that the stock market is just gambling. It's a pyramid scheme for the top investors in WSB. They're gonna sell and leave their followers holding the bag. Someone will be left holding the bag. Every trade has a winner and a loser, but on this one, if you were in by sub $100 share, they should be able to get out fine. Even if they hold to long and it's crashing from 3 to 2 to 1, they'll get out. It's the people buying in now that yes may be in trouble, but there was 138% of this company's shares shorted, and I believe it would take 6 straight days of the firms that are short buying and covering their position for the shorts to be completely out. Some of the super low shorts were covered, but they just doubled down at a higher price and will probably make their money back in a month, but for now people are taking their money by forcing these hedge funds to pay astronomical short interest daily. Not a broker, just someone who has actively traded options for years. Definitely a pyramid scheme, and the options market on this was crazy. Even the options market on this one didn't add up. Yesterday when the stock was at $340, the March $500 call options were listed around $140. That means the stock would have to gain an additional $140 just to break even by late March. Anyone who didn't get in on the ground floor on this one are going to get crushed. Lots of people are going to get hurt and have nothing to show for it. People want me to invest their life savings in meme stocks like GME. I tell them it's very risky and only invest how much you would be willing to lose. Regardless, I have seen people bet their financial lives on GME. I pray to God everyone who does this gets out before the stock falls below what they bought it for. I don't think the meme stock bubble is dead, but I think it's the riskiest area. Millionaires will be born and millionaires will die from this. Personally, BB and AMC are probably your best bets right now. I'm not advising anyone to buy or sell based off this information. So yeah, bottom line, it's insane right now. Seconds can mean the difference in millions. And risk your money at your own discretion. Hedge fund manager. Wednesday was wild. Our P&L shot massively negative, flipped by noon to be massively positive and ended small down. We don't even trade Gamestop, but the shock to the stock is definitely seeping into other positions. Overall, we are delighted that Point72 and possibly Citadel had lost money. We don't buy into the BS that the markets were manipulated in Citadel's favor, but RH not fulfilling its role as a broker is a huge red flag and indicates their precarious financial viability. Tomorrow will be fun, but we expect February to be the real party. FBI have been visiting the trading floor a couple of times this year. There was this guy who was crazy smart and made the company a lot of money. Only problem was that he was always drunk at 8 AM. Always. They let him go. Nicest dude in the building. I see people saying it's not a big deal, but then why would they shut down everything on multiple platforms and cease it all? I'm a floor broker on the New York Stock Exchange, and to be honest it is kind of work as usual, but it's definitely the biggest topic of conversation. We definitely all have to take greater care when handling orders in these super volatile stocks because of the violent moves they have been making. There is fewer of us down there and we all have to wear masks and follow the social distancing protocols, which makes some of the unique things about the floor a little weirder, though it is sort of interesting to see the wider world take an interest in market microstructure to unprecedented extent.